And there we go. The extended lit cycle, again, will open the gates for something beautiful you absolutely will love. And that, as we covered before, or hinted before, is the beautiful lit simplicity approach. I showed you earlier this illustration, factory approach, and that will make, give you overall, like we will do the first part in week 2, and in week 3, we will show you the absolute beautiful factory at its finest. So, and as you can see, it's built in like a factory. And what's the power behind that? Right. So first we had the pirate map. We were a little bit, oh my God, like very primitive, like pirate age, nada, right? But guess what? Now we wrap it up, like a new age begins, and that's the factory approach, like where the automation begins, like everything is structured and makes sense, like clear step-by-step ways of doing things. And as you can see, we always start with the first approach here. We don't start here, like the package doesn't come out here. No, it starts here. Next stage, boom, is this thing, whatever that is. Then the next thing is this thing. Next thing is this thing. Next thing is this. It doesn't randomly boop, skip this one. No, it always goes along in here. It always follows these step-by-step formulas. It's always the same, and that will make it absolutely bulletproof for you to follow the step-by-step formulas, and you will see how insanely it is, right? So we covered earlier like the normal, like the extended lit cycle, but now of course we will put it into the simplicity approach to show you what we mean by that. So guess what? The first thing, as we covered, will always be the build-up. Okay, so again, always your first step to identify liquidity. And again, that's something now you have to write down, put on your wall, put over your bed, put on your bathroom mirror, whatever, because now the true source is getting revealed to you. Okay, so guess what? If you can't even find the build-ups, stay away. Easy as that. If you don't see the build-up, just stay away. That is the first step, so you don't make shit up. Easy as that. If you can't see a clean build-up, there's no need for you to jump in the markets randomly. Okay, as you saw earlier, we will have so many step-by-step formulas, and it starts off with the first one, which is the build-up. Okay, so as you can see, this machine in here, if you go next slide, is right here. The first step of the machinery, the factory, is the build-up. And if you can't find the build-up, stay away. It's easy as that. There will be no package coming out of that. Okay, you don't skip this part ever. Okay, then of course, sets your focus on clean setup. Eliminates making shit up completely. Okay, as you can see, the build-up can be easy like this, like whatever, sideways action, equal highs, equal lows. It of course also can be these channels. And a quick hint already, and that's something you also have to write down. These channel build-ups are probably the most efficient and effective ways to identify liquidity. These are so powerful, and you can see them everywhere, and it gives you hawk eyes into the chart. You will see through the matrix, and let's dig into the chart to find it. Okay, so again, just any chart. I think, yeah, think about it. I think we had the 4th of April before. Now we're just taking the literally next day because it doesn't really matter. So 5th of April. Okay, so where are the build-ups? And now we just again getting used to a factory approach. So what do I mean by that? Boom. First factory or first stage of the factory build-up. Where are the build-ups? Okay, so easy stuff. We have the first sideways action going on. Boom. Okay, getting induced. Then that leads to new channel build-up. Okay, what's going on here? New channel build-up. Okay, building the equal highs later on. New channel build-up. Okay, what happened here? Okay. Then a new channel, and then whoop, chooped it. Okay, and then what happened after? Okay, so build-ups, build-ups, build-ups. Focus on the build-ups first, and you could already figure out, I'm pretty sure you can, to see what they did after the build-ups. And of course, it is the next step coming out of this beautiful factory, or is the inducement. So this right here is the second stage, and as you can see, coming out of the build-up, you just wait until it's getting past the inducement, and push, this thing obviously smacks into it like it does to retailers. It induces them like crazy. So we have, of course, a few variations of inducement, and be aware, again, don't get caught in the inducement always has to be lead to a reversal. The inducement also can lead to a continuation. That would look like this. Okay, so if you have like a channel build up like high, right, like this, and then induces low, it will continue higher. Okay, so it just has to induce low to go higher, right? So again, if it induces high like this, then obviously you can expect a reversal. Okay, but be aware that inducements, of course, can be continuation trades and reversal trades. So don't get caught in this bad habit of always looking for reversal trades. You can definitely 100% take continuation trades, and sometimes they're even nicer. Okay, so first of all, the inducement, of course, it is the last impulse to stop out retailers or to get them in. All right, of course, last impulse to make retailers open positions. So it's either hitting their stops or it tags them in. Breakout traders, momentum traders, they're all getting tagged in, right? Stop orders, they're all getting snagged. And of course, very, very important, write that down. Usually a rapid price movement. We call these things vector candles. Vector candles, all these candles which are huge, huge, huge candles. You have like all these baby candles, baby candles, baby candles. Look at this perfect drawing. And then shoopa, right? It such smacks out like these huge candles, and we call them vector candles. And that's speed, momentum, right? And of course, retailers love that shit because they just getting excited and they think, oh my God, I don't want to miss out. The FOMO triggers, vector candles. Okay, so how does it look like in the charts? Okay, so of course, where are the inducement? We had our build-ups marked in, and based on the build-ups, only then we adding the next step to it. And of course, factory approach, boom. Next step, inducements. Okay, so of course, build-up, inducement. Build-up, induce the channel. And again, that's where we have to draw it in, because you can see, okay, this channel build-up, where does it get induced to? To the low side. To the low side, okay, not to the high side. Again, you see this thing, again, a very helpful trick in here. You mark up where it's very clean in terms of the channel, like or the trend line, whatever you want to call it. And then you just mirror it, so it's actual parallel, okay? That gives you a very good understanding of if it's induced to the high side or not. The moment if you have to think, oh, did it induce the channel or no, then it's a no. If you have to literally think if the channel is getting induced, then it's not induced. As you can see, for example, this channel, boom, clearly induced. Okay, this channel, boom, clearly induced. This channel, right? Boom, clearly induced. And look at it. This candle obviously was solid freaking black until this stage. Think about it. And of course, people see that and think, oh my God, breakout structure, blah, blah, blah. Ooh, momentum to the downside. Oh my God. Of course, that's not what it is. It's the build-up, inducement. Of course, it will break the structure to make everyone excited and trick them in the wrong way. Of course, that's what it is for. That's why structure doesn't work. That's why it only is the inducement and after the build-up. And then we look for, as you learned before, drill and market structure, right? But now obviously see the build-ups and of course see of how they stack it also. With these triple tops or double tops becomes triple tops in here, right? Guess what? Building a channel before it, inducing low once again to do what? Smack the triple tops first of all, building a channel in the process with speed vector candles, boom timing, of course, to finish the cycle off. Triple tops being induced, this channel being induced, boom, can smack lower. What's the next target? You already know. Asia low, boom, easy, okay? What's the next thing? Relevant break of structure. Okay, and that's your only time where you look at market structure from now on, okay? And that confirms the directional shift. It just makes it more easy for you to not making shit up, okay? Because build-up inducement is obviously freaking amazing, but of course, lock it in to get a very good feeling for it. I'm being honest with you. Of course, if you're getting advanced, you can, again, remove the optional step of the relevant break of structure, but then, of course, you need experience with it. Because, of course, sometimes it will not give you relevant market structure break, and it's just chopping away, okay? But then you just miss the move. It's completely fine also in the beginning, but just get used to the concepts and get your solid, like consistent, structure plays going, and just include it for the first things, okay? But at the moment, obviously, you're getting very experienced, very familiar with it, very confident with it, then that's the only time where you could think maybe you can remove it, okay? But for now, 100% don't remove it. Keep it in. Even if you will miss a few setup, it doesn't matter. It just gives you the confidence and makes the whole thing so much more reliable, okay? So it gives you more confluences and, of course, confidence. And again, as we said, it's optional, as sometimes it happens too late and the move is just off and it will not come back to the mitigation, okay? But for now, as you can see, as we had our build up in here, obviously choops the build up with the inducement. That's the push that led to it. Boom, that becomes your relevant break of structure. Same thing here, induced to the high side, choop with speed. That's the push that led to it. That becomes relevant break of structure. Same thing for the sideways action, right? Boom, induced to a low side, right? Boom, okay, goes higher, but then obviously induces to the high side. Okay, that's where you have to look to the left, what's going on, right? And of course, if the cycle is done, then of course, this push led to all this inducement in here. Boom, getting broken in here. And of course, same thing in here, right? So again, don't get confused about these ones, right? So this is like the internal inducement to low side. And yes, of course, if it goes like low in here, you can trade it as well to the upside. But then, of course, be aware of your next target, and then it gets invalid. We will dig into that later, and that's the smart money traps. So just for argument's sake, yes, if you have an inducement low in here, this gets broken. If it comes, it stays inside in here, right, and comes lower, boom, yes, that's your trigger to the buy side until it takes out the next liquidity zone. If it takes out the next liquidity zone, this becomes your inducement. That's the push that led to it. That's your new break of structure, and obviously you expect this and then lower. Okay, perfect. Same thing for this example, right? Again, that's where you just have to backtest it to get a proper feeling for it, and then it should become very, very obvious for you as well. Okay, so same thing here. If this gets broken here, let's say this push, as you can see, builds the quadruple top, and if it comes lower in these areas, yes, it's good to go trade into the inducement in here, and then of course, break of structure now after this inducement. Okay, this is the push that led to it. Boom. Good for this one. Okay. But again, I will show you in charts, and you will even see in charts it's even more obvious than in illustrations. Okay, so let's dig into it. So where are the relevant market structure breaks or break of structures? Okay, and again, as you can see, we have our factory going on, and we're just adding the next step. Boom. Okay, so as you can see, everything stays the same. We're just adding one more step. Build up, inducement, that's your break of structure. And again, as you can see, as we had it before, yes, if this push comes all the way back in here, that's something you would be interested in, but it did not. So it's fine, but to just mark it up anyways. Okay, so next, build up, inducement, that's the little baby push, led to it, perfect. And guess what? If price action would come low in here, that's your trade. But guess what? As we had the illustration before, if it takes out the next liquidity area, then of course you would have to be very aware that this becomes a smart money trap. Okay, and that's also very easy ways to identify smart money traps later on. We will dig into it also. Okay, so guess what? Then of course we have this inducement low, induced high once more time. Now we have the proper inducement, London open to the absolute minute. What a surprise. What's the push that led to it? Pull back, push. That's the internal break of structure. Should be very, very clean on the 1 minute, right? Again, always remember, that's always 5 minute charts. On a 1 minute, that's like the picture perfect break of structure, right? And of course, you know what this is and then what it should do, right? Perfect. Next thing, build up. Of course, it will induce the next structure point. Where's the break of structure, right here, or if you make it like more aggressive, right here. Okay, so that's broken, so you know what this zone will most likely become. Okay, then of course building up the triple top, perfect. Build up, inducement, induce the structure point. Faking the break of structure for the retailers is our inducement, perfect. Break of structure after the inducement. In here, obviously it's a little bit tricky because we're not really having any pullback zones, or if you want to take this one, but that's very aggressive. Again, in scenarios like this, obviously in the 1 minute, there will be something in here and you trade it right off these areas. But as we're only looking at the 5 minute chart in here, that would be all the way down there, your break of structure. And of course, it's very unlikely that it comes all the way back in here. And of course, you know what the London close is. And then you also learned about the supply turn into demand areas, right? But that's at least relevant market structures we have, right? Of course, it always comes off the build-up, inducement, and then break of structures. Next thing then is the mitigations. Okay, so fills, price inefficiencies, all these imbalances. Always be aware and take a look at these imbalance zones after and only after the cycle is completed. Again, there's imbalances there everywhere. But guess what? The build-up, inducement, break of structure, that's not everywhere. And only if you follow these steps, then look at imbalances and then look for your proper zones of mitigation where it makes sense. Okay, bring a structure into it, like clean step-by-step formulas. And of course, comes back to supply and demand areas, right? So always, that's why we dig also a little bit into supply and demand areas. If it's backed up with imbalances, even nicer. And that will provide you with these point of interests, these POIs, right? And again, as you can see, sometimes if it's like tricky in this scenario, like we're having a build-up, inducement, break of structure is very high in here, that gives you like 2 POIs. And that's how you have multiple confluences later on when we dig into the entry helper, if this sum will be valid or if you should wait for the extreme down there. Don't worry about that too much for now. Everything will be covered, of course. Right, and scenarios like this, of course, inducement, here's a break of structure, should come back in here. Again, if the extreme is already mitigated, there's no imbalance left, of course, easy stuff. Okay, same thing in here. If this is already mitigated, of course, after the break of structure should come back in here as illustrated in here. Like obviously these scenarios are the nicest ones, right? Of course, when you have like this clean break of structure, you only have 1 POI in here. Perfect, but of course everything will be rules based if we dig into entries or when we dig into entries. Okay, so does it look on charts? Of course, even cleaner. And take a look. So we had our build-ups, inducements, break of structures, and now we look for mitigations. Okay, so boom, we add one more factory part into the whole system, and we can already see, okay, as we had before, build up, inducement, break of structure makes this zone valid until when? Next liquidity grab, and then it gets invalidated. Okay, so if it doesn't grab the next liquidity yet, so let's say it stays inside here as it did, okay, and then of course comes back in here, building the equal highs, perfect, you can trade it until it takes it out. Right, but as you can see, it took it out in here. So that's why this zone gets invalidated the moment it takes out this liquidity area. Okay, perfect. Same thing in this scenario. You have your channel build up, induce the channel to low side. You already can see what the inducement of this channel did. Right, tapped into the imbalances, tapped into demand or demand areas in here. Perfect. That's where the inducement taps into the mitigation of the build-up. That's of course a 100% buy, right? And if you want to take this one after the inducement of the thing, you don't like the extreme, you have to wait for this internal break of structures right in here. On a 1 minute, it should be definitely way more cleaner, right? But same thing then. This is valid until it comes here. If the moment it grabs the next liquidity zone, invalid. Okay, same thing as here. Okay, that just keeps you away from taking these zones when it's too late. Okay, as you can see, this even turns into the smart money trap, gives a false reaction. But guess what? We have to identify the next build-up area, which is the channel in here. Speed, vector candle, huge momentum candle to the downside, induces now obviously the structure point. gives all the retailers the confirmation that it's reversal, whatever. Like they seeing this break of structure, you see the inducement out of this buildup. You wait for what? This break of structure. You see the next imbalance area. You know you trade away from this inducement. You still have these huge build-up areas in front, like this double top in here. You have your imbalance area. You have your break of structure. You had your build-up. You had your inducement. Another build-up in here. Boom. Speed, timing, vector candle into imbalance area. That's your potential trade in here. And look at the timing. What a surprise. Magic manipulation minutes to the absolute speckle. All right, to the absolute minute. Same thing here. Channel upwards, building the quadruple top in here, induced structure to your left. You wait for break of structure, comes back, boom. Where's your imbalance from here all the way? Obviously, you had it if this candle was not there yet. You had imbalances from here to here, gets filled, boom. That's your entry after an inducement, after a buildup, after this huge buildup. So you're trading into it, boom. And you see what a juicy trade that would have been. Oh my God. And I'm pretty sure like majority of our students smack this trade. Easy. Okay. Then of course, this cycle now is completed to the high side. Build up, huge build up with the triple top. Boom. Inducement with speed vector candles and then POY on the higher time frames, right? That's when you obviously look at multiple time frames to find out what's going on. You see huge buildups in here. Look at this. Double tops left and right all the way. And then, of course, you look for the extreme mitigation. You see this wick that was imbalances like crazy. And of course, if the cycle is done, you look only then you look for mitigation. Then you look for the higher time frames and see, oh, yes. Oh, wow. There is my huge imbalance areas, which gives you my PY. Timing, perfect. Cycle, done. Wow. Okay. And let me look for this one now. Okay. And then you break it down to the 1 minute and then always look for the confirmations in here. Right, but just looking for the 5-minute chart, where's the break of structure all the way down here. That's your supply, demand area, whatever that led to it. And of course, sometimes demand turns into supply or the other way around. And of course, you wait for break of structure in here, boom, gets into it, and then obviously is gone. Okay, so overall, as you can see, the whole thing is just clean as hell. It's actually crazy of how clean it can be. And of course, we have a few more examples.